The US dollar is incredibly important in the world today. It's used for trade between countries even if those countries aren't the United States. Central banks around the world hold US dollars as reserves. This widespread use makes the US dollar the world's reserve currency. It's a powerful position for the US to hold. The dollar's influence is felt everywhere. When the dollar is strong, it can be more expensive for other countries to buy things from the US. Conversely, a weak dollar can make US goods and services more attractive to international buyers. Understanding the dollar's role in the global economy is crucial for anyone interested in finance, trade, or international relations. Its value and stability have far-reaching consequences for businesses, investors, and policymakers worldwide. The US dollar wasn't always the dominant global currency. Its rise to prominence began after World War II. The war had devastated many economies in Europe and Asia. The US, however, emerged from the conflict relatively unscathed and with a booming economy. The Bretton Woods Agreement of 1944 formalized the dollar's newfound status. This agreement pegged the value of other major currencies to the US dollar, which was directly convertible to gold. This arrangement established a stable international monetary system and cemented the dollar's position as the world's primary reserve currency. The post-war period saw the US emerge as a global superpower, both economically and militarily. This dominance further solidified the dollar's role as the currency of choice for international transactions. There are several reasons why the US dollar continues to be the world's leading currency. One key factor is the sheer size and strength of the US economy. It is the largest economy in the world, and its stability makes the dollar a safe haven for investors during times of global uncertainty. Another important factor is the depth and liquidity of US financial markets. The US has sophisticated and well-regulated financial institutions including stock exchanges, bond markets, and investment banks. These markets attract vast sums of capital from around the world, further reinforcing the dollar's dominance. Finally, the US dollar benefits from political and military influence. The US is a global superpower with significant geopolitical clout. This influence, combined with the dollar's economic dominance, makes it a strategically important currency for countries to hold. Despite its many strengths, the US dollar faces growing challenges to its dominance. One significant challenge is the rise of other major currencies such as the euro and the Chinese yuan. These currencies are gaining traction in international trade and finance, potentially eroding the dollar's market share. Another challenge is the increasing geopolitical fragmentation and the rise of protectionist policies. As countries become more nationalistic and less willing to cooperate on the global stage, the international monetary system could become more fragmented, potentially undermining the dollar's central role. Additionally, US economic and foreign policies can impact the dollar's value and stability. For example, large budget deficits or trade wars could weaken the dollar and make it less attractive to foreign investors. Section 5. The Trump Effect Uncertainty Looms. The re-election of Donald Trump in 2024 and the continued Republican control of Congress have injected a degree of uncertainty into the global economy and the future of the US dollar. Trump's unpredictable policy decisions and his preference for bilateral trade deals over multilateral agreements have raised concerns among investors. Trump's protectionist trade policies, including tariffs on goods from China and other countries, have disrupted global supply chains and increased costs for businesses and consumers. These policies have also fueled tensions with US allies and fueled uncertainty about the future direction of the global trading system. The long-term impact of Trump's policies on the US dollar remains to be seen. However, the uncertainty surrounding his administration's actions has the potential to undermine confidence in the dollar and accelerate the shift towards a multipolar currency system. Section 6. A dollar-divided possible futures. Predicting the future of the US dollar is a complex task, but several scenarios are possible. The dollar has long been a cornerstone of the global financial system, and its future trajectory will have significant implications for economies worldwide. One possibility is that the dollar retains its dominant position as the world's reserve currency. This would mean that the US continues to play a central role in global trade and finance, with the dollar being the preferred currency for international transactions. This scenario assumes that the US economy remains strong, its financial markets continue to attract global capital, and no viable alternatives to the dollar emerge. The stability and trust in U.S. institutions would be key factors in maintaining this status quo. Another possibility is a gradual decline in the dollar's dominance. This could happen over several years or even decades, as other currencies start to gain more traction in the global market. This scenario could unfold if other major currencies such as the euro or the yuan gain wider acceptance in international trade and finance. Increased economic stability and growth in other regions could make these currencies more attractive. It could also occur if the U.S. economy weakens or if its political influence wanes. Factors such as political instability, economic recessions, or loss of confidence in U.S. leadership could contribute to this decline. A more dramatic scenario is a rapid shift away from the dollar as the dominant reserve currency. This would be a seismic shift in the global financial landscape, leading to significant economic upheaval. This scenario is less likely but could occur in the event of a major geopolitical shock, such as a global conflict or a collapse of the international monetary system. Such an event would have far-reaching consequences, disrupting economies and financial systems around the world. Section 7. The importance of global reserves. Central banks around the world hold foreign exchange reserves as a buffer against economic shocks. These reserves act as a financial safety net, ensuring that countries can stabilize their economies during turbulent times. These reserves are typically held in a basket of currencies, with the US dollar often occupying the largest share. The euro, Japanese yen, and British pound also play significant roles in these reserves. Holding reserves in US dollars provides countries with stability and liquidity, allowing them to intervene in foreign exchange markets to manage their currency's value. This intervention can help prevent excessive volatility and maintain economic stability. The dollar's role as a reserve currency provides the U.S. with a unique advantage. It enhances the country's financial influence and allows it to play a pivotal role in global trade and finance. It allows the U.S. to borrow money at lower interest rates because foreign central banks are willing to hold U.S. Treasury bonds as safe haven assets. This demand for U.S. debt helps to keep borrowing costs low for the American government. This privilege gives the U.S. greater flexibility in managing its economy. It can implement monetary policies with more freedom, knowing that there is a consistent demand for its currency and debt. However, the reliance on the U.S. dollar as a reserve currency also creates risks. Overdependence on the dollar can make the global financial system vulnerable to U.S. economic policies and conditions. It can lead to imbalances in the global economy as countries accumulate large dollar reserves, potentially fueling asset bubbles or inflationary pressures in the U.S. This accumulation can distort economic policies and create financial instability. Section 8. The allure of U.S. financial markets. The depth and liquidity of U.S. financial markets are a key factor behind the dollar's enduring strength. These markets are not only vast but also highly dynamic, attracting investors from all over the globe. U.S. stock exchanges such as the New York Stock Exchange and NASDAQ are among the largest and most active in the world. They handle billions of dollars in transactions daily, making them pivotal to global finance. They provide investors with access to a wide range of publicly traded companies, representing diverse sectors and industries. This diversity allows for a broad spectrum of investment opportunities, catering to different risk appetites and investment strategies. Similarly, the U.S. bond market is the largest and most liquid in the world. It offers a variety of instruments from government bonds to corporate debt, providing options for both conservative and aggressive investors. U.S. Treasury bonds are considered among the safest investments globally, attracting investors seeking stability and capital preservation. These bonds are backed by the full faith and credit of the U.S. government, making them a cornerstone of many investment portfolios. The size and depth of the U.S. bond market provide ample opportunities for governments, corporations, and individuals to raise capital. This accessibility to capital is crucial for economic growth and development. The sophistication and regulation of U.S. financial institutions also contribute to the dollar's appeal. These institutions are known for their innovation, offering a range of financial products and services that meet the needs of a diverse clientele. U.S. banks, investment firms, and regulatory bodies operate within a well-established legal and regulatory framework that provides investors with a degree of confidence. This framework ensures transparency, fairness, and accountability, which are essential for maintaining investor trust and market stability. Section 9. Conclusion: the dollar's uncertain future. The US dollar's position as the world's reserve currency is a legacy of its historical dominance and the strength of its underlying economic and financial institutions. However, the dollar's future is not guaranteed. The rise of alternative currencies, geopolitical shifts, and domestic policy decisions all pose challenges to its supremacy. The dollar's trajectory will depend on a complex interplay of factors, including global economic growth, technological innovation, and the evolution of the international monetary system. As the world becomes increasingly multipolar and interconnected, the dollar's role may evolve, potentially leading to a more diversified and fragmented global currency system.